Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden within corporate filings. Today, we're diving into a report from Moody's Corporation now. Usually, these reports are packed with dense financial data, but this one has a twist, a new face joining the board, and some interesting timing. Let's see what is really going on behind the scenes. Before we jump in, if you love getting these kinds of straightforward insights from tough corporate documents, make sure you subscribe. And hey, we've got a growing community on Discord where we discuss these things further. The link is in the description below. Alright, so we're looking at a Form 8K filing from Moody's Corporation that is MCO on the New York Stock Exchange. This is a current report, meaning it is for significant events that don't happen every day. This particular filing announces a key change in their leadership structure, and it is dated the 12th of January 2026. That date is important because it tells us when the news was officially released to the public. The main story here is about a new director joining Moody's board. Her name is Lisa P. Sawicki, and she is set to officially join the board on the 16th of March 2026. With her arrival, the board will grow to 10 members. Ms. Sawicki is 58 years old and brings a wealth of experience from PricewaterhouseCoopers, or PwC. A major professional services firm, she was the chair of their global board and was a client partner until 2025. Before that, she held very significant roles within PwC for over 3 decades, starting way back in 1989. She specialized in financial services and was a partner since 2003. She's also a certified public accountant, holding licenses in New York and North Carolina. And she studied accounting at New York University. Now, how will Ms. Sawicki be compensated for her new role? For non-employee directors like her, Moody's has a compensation plan. She'll receive an annual cash retainer of $120,000 paid out in quarterly installments on top of that in March 2026. She'll get an award of restricted stock units. The value of this award will be equivalent to $230,000 based on the company's stock price when the award is granted. This award will vest, meaning she'll fully own it 1 year after it is granted. This is a pretty standard way to compensate board members, tying their pay to the company's performance through stock awards. The filing also confirms some standard legal and procedural points. Ms. Sawicki's appointment wasn't made because of any pre-existing deal with someone else. There are no family ties between her and the current directors or executives. And importantly, there haven't been any transactions between Moody's and Ms. Sawicki that would be considered related party transactions requiring disclosure. This all points to a straightforward addition to the board based on her qualifications. This section basically reiterates that the news about Ms. Sawicki's appointment was also shared through a press release, and that press release is attached as an exhibit to this report. Regulation FD disclosure is all about ensuring that all investors get the same material information at the same time, preventing unfair advantages. Here, they list the exhibits filed with this report. We've already mentioned Exhibit 99.1, which is the press release, and then there is Exhibit 104, which is formatted for online viewing and is basically the cover page of this report itself. Now, let's talk about what this all means. Moody's Corporation is a giant in the financial world, known for credit ratings, research, and data. They play a crucial role in the global economy by assessing the creditworthiness of companies, governments, and debt securities. Their stock, MCO, is actively traded on the New York Stock Exchange, as are some of their debt securities, like their 1.75% senior notes due 2027. And their 0.950% senior notes due 2030. While this report doesn't contain detailed financial tables like you'd see in a quarterly 10Q or annual 10, the appointment of a new director, especially one with such extensive experience from a firm like PwC, is always noteworthy. It signals potential strategic shifts or a reinforcement of governance. Ms. Sawicki's background in assurance and financial services leadership suggests she'll likely play a key role on the audit committee, and her experience in governance and nominating roles means she'll also be involved in how the board itself is structured and how new members are selected. In the world of credit ratings and financial analytics, good governance and strong oversight are paramount. Moody's faces constant scrutiny, and having experienced individuals on its board who understand complex financial landscapes is vital. Ms. Sawicki's appointment appears to strengthen that oversight. Looking at the timing, an announcement in early January for an effective board date in mid-March gives a clear pathway for her integration into the board's activities. The compensation structure, with a base retainer and stock awards, aligns her interests with those of shareholders, which is a positive sign for alignment. What are the broader implications? Companies like Moody's operate in a highly regulated and competitive environment. Their business model relies heavily on trust, accuracy, and timely information. Adding experienced leadership helps maintain that trust. The fact that she's not affiliated with any other entity in a conflicting way And there are no disclosed related party transactions, means her focus is likely to be purely on serving Moody's and its shareholders. So my take on Moody's here, this filing itself is light on hard financial numbers, but it's a signal about their commitment to strong corporate governance and experienced leadership. Ms. Sawicki's background is impressive and suggests she'll be a valuable asset, particularly in areas of financial oversight and board development. The compensation package is in line with industry standards for public company directors. The main takeaway is that Moody's is actively managing its board composition to ensure it has the right expertise for the challenges ahead. While we don't have specific financial performance metrics in this particular report, the focus on governance can indirectly impact long-term financial health by ensuring better strategic decisions and risk management. The risks for Moody's generally involve regulatory changes, competition from newer data and analytics firms, and maintaining the integrity of their ratings in a dynamic global market. This move seems calculated to bolster their internal controls and strategic direction. It is a solid, albeit predictable, move for a company of Moody's stature. Alright, that is our breakdown of Moody's Corporation's latest filing. What is your take on this board appointment and what it signals for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the corporate world. And don't forget to check out the Discord in the description for continued discussion. Thanks for watching, see you next time.